The bold man is here, sir. Don't worry, I'm not late. I'm just getting ready for the madness. Welcome, ladies and gentlemen. It's Friday then. Saturday. I don't know what it is, but by the time Thursday, Friday comes, I am smacked. Honestly. Smacked like Bitcoin's price right now, according to On-Chain. Bitcoin realized losses are at the highest since 2022. The FTX collapse. Well, guess what? It's time to buy. That's what it is. One man's fun is another's hell. And those of you that are into the Metallica know exactly what I'm talking about. Mad love to my Metallica gang. So, what can we expect? Well, we've got ourselves quite an event in the next 55 minutes. Core PCE is going to be released. Earlier on this morning on Bloomberg, a couple of the heavyweights were talking about the idea that PCE is expected to come in at 0.3%, which could be paving the path to where 2026 could be one of those let's wait and see with regards to interest rates. Most of the participants on the street are in the belief that the December rate cut has already been priced in. You had Hassett this morning saying, even though I'm not in a position to say, even though I'm the next dude to replace Jerome Powell, he thinks that a 25 basis point cut is on the cards. Cool. So the market's not getting the big rate cut that it wants, which is 50 basis points. We're not going to get any points that Donald Trump's talking about, which is 100 basis points. Now, what is this guy talking about? 100 basis point cut. Do you understand what that does? It undermines the Federal Reserve, and then it effectively forces investors to say, hold on a second, you're cutting the rates that aggressively, something's broken. We're going to sit back and wait a little bit. We'll plank ourselves into dollar and wait till the yields go up a significant amount, because if you've cut them so aggressively, that means something is wrong. So we're going to want a higher rate of return for buying US debt. In the meantime, let's go over to Japan and start planting our liquidity over there, because money is still cheap and you guys are still expensive. That's the current story right now with regards to interest rates. But today we're going to get a revelation as to whether or not inflation is going to be a problem in the future. Now, of course, we don't have the full picture with regards to the data. However, the labor market is starting to ring some bells and whistles. Of course, immigration is slowing down in the US, which is what is leading to this story of not many jobs being offered. However, what we've got to pay attention to is the fact that the NASDAQ and the S&P are very close towards their all-time highs. Talking about in the stock market composite index, forget the futures, even though the futures are somewhat close to it. But the overall picture is that most are expecting the NASDAQ and the S&P to start making some significant movements and clearing their all-time highs before the FOMC result. Now, that will be on the 10th of December, and that is going to be at around 7 p.m. UK time. So make sure that you guys are liking this live stream, maybe even subscribing so you don't miss out on what could be Jerome Powell's last good afternoon and the purple tie and the clearing of the throat and all that fun and games. So, ladies and gentlemen, I've got another announcement to make to you before we get into the flavor of Bitcoin and talking about the most losses that have ever happened in crypto, which is actually not quite true. So we'll dive into that. Whiteboard sessions. I've completed a revamp of all of the old masterclasses. I've taken the main masterclass sessions that I believe will serve you all in understanding the concepts of the hybrid system, and I have redone them all on a whiteboard. I'm going to show you what that is, but they are live right now on the website. Okay, so for those of you that want to just quickly get involved into that, it's pinned to the top of the chat, but I'm going to break it all down for you very shortly. So, with that being said, happy days to you all. Bro, can you talk about what happened with the Fed pumping money into the market? Well, they've been saturating the markets. Banks have been like, yo, where's the money, man? You've been sapping it with these high interest rates. We need you to start putting money into the market to encourage us to go over and start taking advantage of US bonds. But if inflation's going to be a problem, that means my dollar's going to be deemed worthless. So I'm going to need a bit more collateral from you. In other words, higher yields, just to satisfy my acceptance of buying your shocking debt. Anyways, with that being said, let's break it all down, gang. Here we go. So, Bitcoin, back to those wonderful psychological levels. The green vector candle. bit of an issue. Anyways, breaking it all down. So they're saying here that futures push higher with record in sight. I mean, it's not bad. It's not that much of a bad pullback, given that there's no volume on the NASDAQ. And this is very important. This is the NASDAQ composite. That effectively means all of the tech stocks that are under the name of the NASDAQ that have all come to the play and be like, hi, I want to be on this exchange or this index. Okay, cool. Here you go. Welcome to NASDAQ. All right. You're a tech company. Cool. What do you provide? I provide AI in whatever it is. This is what is represented by those companies. Look on the bottom right. You can see that we have had a treacherous week with the outage on the CME and what have you. You can appreciate that we are trying to make an all-time high with zero volume. Where my divergence traders at? Price and volume ain't starting to click. However, if the PCE data comes out today and shows the following, then we're going to understand where we are with the rates. So at 3 p.m. UK time, 10 a.m. Eastern Standard, we're going to reveal the core price index month on month. For those of you that don't know, this is the changing price of goods and services purchased by consumers. Now, we have been getting some information regarding wholesalers, or not wholesalers, but retail supermarkets like Walmart and Target. And Target effectively said that it's not looking good in the future because people are starting to cut back on spending on high top-end goods, okay? So that's kind of giving them the idea that retailers in the US are starting to claw back in terms of their behavior in spending money. That can also be an indication that people or consumers, they're being cautious about their dollars. Does that mean the economy is going to slow down? Well, no, not really. It's just because the interest rates are relatively high, which those high interest rates are then naturally going to be pushed onto the consumer. Tariffs haven't made it easier because all the companies are starting to raise the costs of their goods and services and pushing them onto the consumer, which is why a lot of small businesses are starting to struggle, which is why a lot of the unemployment claims data has come from people in small businesses that are not getting involved in the work. But then you've got the immigration story. So you've got a number of factors that are contributing to the idea that the labor market, given that that is going to be the main reason why the Federal Reserve is going to cut the interest rates, the PCE itself is going to dictate if the cost of goods and services is going up. That means going into 2026, we might not get as many cuts as the market is anticipating. And that's something you've got to be very mindful of because the market's already priced in the idea of where we are with the rates. Right now, we have 87.2%, and that was from yesterday's unemployment claims data coming in showing an increase of 191,000 jobs. What on earth was that? Quickly refresh this just to understand where we are with it. It's at 87.2. So the market has effectively priced in the idea that the rate cut in December, which is in 5 days' time, is pretty much on its way. So does that leave the market to continue higher? In essence, yeah, because money is going to be cheaper. So the market's going to price that logic in. But are we getting the commitment? Like I said, we don't really see that commitment coming in with the volume being so low on the NASDAQ. Now, if they do decide to pump price today, one bar itself, I mean, for the weekly, you can see that the NASDAQ has done, it's all right. It's trading at the top range of its price, but it's not really had that much of a volatile week, which is obviously showing you that there's no volume. So participants ain't really getting in with the flavor. Speaking of which, going over into where we are right now in the futures markets, natural gas, silver, rough rice, feeder cattle, palladium, lumber, lean hogs, live cattle, cocoa, and the DAX are all performing great. Where's my Bitcoin? Where's my NASDAQ? Where is everything? Oh, well, Bitcoin's downstairs. Here you go, down here. Bitcoin is next to orange juice. Ain't no sunny delight right now. Anyway, I just thought I'd throw that in. I just made it up. So speaking of which, BlackRock's been doing some nasty numbers, man. They have been moving a lot of BTC. I mean, that would then explain the idea that we do have quite a bit of Bitcoin realized losses since 2022. It says here that Bitcoin short-term capitulation may signal a market bottom. All right, then let's go to the Glassnode to understand where we are. Well, no. We're not there yet. According to this Glassnode story here, the pink stuff is capitulation. We have not had any capitulation events since 2022. The last one was in December 18. Then the previous one after that, was 2020. And then, of course, between August 2022 to December 2022, April 22, to December 22, we had a capitulation event. Where we are at right now on the far right shows us that investors are feeling anxious about Bitcoin, okay? So when this line right here is trading negative or going down, it suggests that the unrealized profit and losses of investors as a representation of a index as such, it's showing you that some of them are feeling very anxious about Bitcoin's price. Going over into Bitcoin's price right now, you can see that it is starting to pull back. But let me explain something. Even if Bitcoin were to just do up and then down, we are still in good areas, okay? We don't have the FOMC just yet. We're getting the core price reading, and it needs to come in at 0.2%. It needs to be lower than 0.2% to suggest the idea that companies are not increasing the cost of their goods and services. Because if it comes in higher at 0.3%, then inflation is going to be a bit of a problem. And that means going into 2026, we probably won't get that many rate cuts, and there's going to be a lot of pauses. Speaking of which, going into next week, we know that Bank of Japan Governor Ueda is going to be speaking on the 9th of December before the FOMC. So if he does decide to turn around and say, yeah, we're going to increase the interest rates, which quite frankly, ladies and gentlemen, he has to do that because the Japanese yen yield is at 1.945%. You know what this is like, right? I'll explain to you what the Japanese yield at this level is like. Imagine you've turned up to a house that's on fire. What's the first thing you're going to try and do? Put it out. But instead, you're coming like Slim Shady with a big barrel of petrol, gasoline, and saying, you know what? Let's just add a little bit more. And just standing there, hoping you don't get burned. You know, when you're cooking, you're like, whoa, 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 all that fat splatting in your face. You just pour a little bit of oil on there and it goes up again. That's exactly what this is, ladies and gentlemen. The Japanese are playing a very fine game with their yen. And this has to stop because it's not very good for their GDP and, of course, the faith in investors buying their bonds. 9th of December, if Bank of Japan's Governor Ueda turns around and says, we're going to increase the interest rate because these levels are not sustainable and we do need to return back to a normalization policy, then, ladies and gentlemen, your carry will officially be unwinding. And I believe that they're already starting it, but they just need that solidifying comment from Ueda. 1.945%, ladies and gentlemen. Do you understand what that is? That is horrible. Anyways, going into something else. Good old Tommy Boy says that Ethereum is grossly undervalued. I mean, let's just look at it from this perspective, okay? So you've got this company. This is who it is. This is a company that's trying to mimic the idea of what Michael Saylor has been up to with its Bitcoin, okay? And it's going to be purchasing Ethereum and create a treasury. All of a sudden, in the quarter of 2025, September, we've had 152 funds step in and get invested in this. It's got a $10 billion market cap. All right, it's dog for price action because of the volatility, but there's been a lot of volume coming into play with this bad boy, which could be suggesting that there is going to be a lot of accumulation happening with regards to Ethereum. And maybe Tom Lee is starting to be like, you know what, come on, buy the Ethereum because it's at least going to hit 12,000. This guy is grotesquely bullish, okay? And when you're in a bull market and you sustain the idea of bullish mindset, you then tend to look like you know what you're talking about. Because if the market's going up anyway and you say the market's going up, then you look like the top boy that says that market's going up. So you're renowned as a guy who calls the great moves, okay? But it's getting kind of hard for investors to see that logic when you've got the idea of Wall Street selling the Ethereum, okay, selling the Bitcoin, because they're not interested in what the valuation of it could be. They're interested in the expectation of it now, because how can I generate a yield now holding it? Well, if the bigger picture is saying that we're going to see rate cuts, then most likely Tom Lee is right in the idea that we are going to see Ethereum's price soar to 12,000. Okay. But we need to get interest rates down, and we need to stop letting Wall Street treat cryptocurrency like a normal asset or a normal ETF, because that's exactly what they are doing. They are offloading. Now, what if they are doing all this offloading in the last 2 days and a couple of hours because the PCE that's due to come out very shortly could be painting a different picture about the future of interest rates? Remember, investors' expectation of yield in the future is represented by the yields. As it stands right now, the 2-year yield is currently trading spot 3% positive. You've got the 5-year just trading flat, and of course the 10-year and the 30-year near enough trading flat. But there is like a positive trajectory of the yields, which means that investors are assuming that the rates in the US are going to be higher for longer. So that's something you've got to really pinpoint and understand. The yields tell you investors' future expectations of rates. That means future expectations of yield. Okay? Something you got to understand, because then you can go and look at this stuff right here with the glass node and say, oh, there are a lot of people losing money in Bitcoin. Well, that's because those guys are holding on to the Bitcoin and their profits are just being depleted on the assumption of certain price points that they've been buying it at and accumulation, whatever. Okay. And this is something that I've got to say to a lot of people, right? The idea of holding, I understand. Just hold on to the Bitcoin, hold on to the Bitcoin. Okay. But sometimes you do need to start maneuvering. You've got to take advantage of where you see exposure that you can generate a yield from. If your Bitcoin is losing money, where else are you going to go? Now, if you're only fixated on cryptocurrency, you're only going to stay in cryptocurrency or just go into USDT. Well, you ain't going to be getting that much of a return on USDT, just buying USDT or holding it, okay? But you've got to then say to yourself, well, okay, then if Bitcoin's coming down because it's deemed as a speculative investment and it's deemed as a high-risk investment, then I'm going to start coming out of Bitcoin or go into gold and start picking up on that logic, because macroeconomically speaking, when the rates are going to be looking like they're going to get cut, that means gold's price is going to go up because the yield on the dollar is going to be down. What if I want to see speculation in the stock market? NASDAQ moves so much more faster than Bitcoin. If you can take advantage of some plays on plays on NASDAQ, then you can effectively taper off the loss that you've got with the Bitcoin in the anticipation that you're going to see it make a return back up, okay? Just holding, in my opinion, is ignorance. Think about it. You're purposely just holding on to the idea that Bitcoin is the coin. Maybe it is, but we've got to go through so many transitions before Bitcoin becomes the asset. And that's what everyone is hoping for. Hope is not an indicator. Simple as. You've got to adapt. You've got to maneuver, because you're not in the game of prediction. You're in the game of reactions. And you've got to get that in your mind, because then if you are in a position where you're in such a drawdown, you can't say to yourself, well, I didn't see that coming. Of course you did. Everything has been suggesting that that could be the case. I've said this, that Bitcoin could be the true representation of value in the future. If Bitcoin's not going up and you've got the NASDAQ soaring and you've got gold going up and everything, what's going on? Why isn't Bitcoin going up? Bitcoin might be the true representation of value. So if Bitcoin's price is not soaring up, that must mean that investors don't want risk. That could be the risk on-off indicator. Just saying. Going into Bitcoin's price right now, it's currently trading negative. Don't be a moon boy. Don't be please tell me you're not telling me that you think I'm a moon boy. Please come away from that. Yeah, he's holding 10.5 billion in holdings in Ethereum. I'd be panicking as well. I'd be hoping for the best. You know? Bit of off-topic question. Tina, what do you think the impact of the Market Structure Act will have on crypto markets? Do you actually see reducing manipulation, or it's business as usual? Of course it's going to be business as usual. Right? It's a means of, it's a tax. Any regulation is just a tax. That's how it is. There's going to be a fee. There's going to be a cost. There's going to be something that's going to come up, you know? Tino, bearish moon boy. All right, get rid of this guy. Get rid of him. Oh, God. Nice shaved head. It shines. Anyways, just before the market opens, here's the update, ladies and gentlemen. So on the Traders Reality website, there are 26 whiteboard sessions, okay? and they all range on various strategies on the hybrid system. You've got how to trade V-shaped reversals, how to identify the cycle of price, the block trade principle, trading M's and W's, VWAP strategies, stop hunts, using order flow and vector candles, trading the 50% of the vector. One that I think you'll all benefit from if you do watch it is how to use macro data to trade, because that's where we are right now, okay? Now, the original masterclass sessions are still available. They're in the archives, but this has been, it's more concentrated sessions on each topic of the hybrid system, okay? So that is all up and running. If you want access to that, it's pinned to the top of the chat and in the description, and you get that as a member of the Traders Reality channel. It's not channel, of the Traders Reality website, okay? Cool. Now, with that being said, just going over into a little bit of Bitcoin behavior, just to break down exactly what's going on. You can appreciate that we have had quite a significant amount of bids. They're buying. How long are they going to be buying for? This is telling me that they're buying. Okay. Picking up the bids. Oh, wow. Very nice. Got a lot of imbalance down here. The only next cluster of ranges is down here, 84,000. I mean, that's going to be a bit of a drop on the Bitcoin if it does decide to take that, but that will be consistent with the vector candle recovery point. That would only make sense. They are all updated with a chalkboard view. Chalkboard view? No, they're like this. I'll show you. Let's just put up... let's do this one. Okay? Here's an example. So when you click on the learn more, it brings you up to here. How to use the trader data and happy days. And it's just me just giving you a breakdown of everything so that you understand exactly what the idea of trading the macros is. Okay. And that's how you view it. Some of them have me going into the charts, but all of it is, majority is on the whiteboard. Each session is between 15 and 35 minutes long. Well, there is 2 sessions in there that are for an hour, but that's the longest one you're going to watch. Otherwise, they're about 20 minutes, 15 minutes, 30 minutes. So you can actually watch a few of them in a whole weekend, to be honest with you guys. You could get it all done in a couple of days if you were watching it back to back. But check that out. All right. It's making life a little bit easier. Cool. Any questions other than that, ladies and gentlemen? Can you give us a video on the board regarding how to build positions when you profit? Usually I too soon and it ends up near my entry. Well, that is part of that there, my friend, is here. So if you go to the members section on the Traders Reality website, all right, and you go down to the PDF library, in the PDF library, I've given you a checklist on scaling in, okay? Where is it? There you go. This whole checklist right here talks you through how to add to a trade that's already profitable, okay? Scaling in, right? And it's a checklist of everything that you need to actually understand, ideally, the optimal time for you to add to a trade, all right? So you get that with the membership anyway. And you get plenty more V-shapes, vectors, you get the whole thing on there, okay? Tino, the highlight of my evening, my man. What's good, bro? Making market facts understandable in a fun way. Keep at it. And if you're ever around Tokyo, join me in an old-fashioned okay, then. I need to get to Tokyo, ladies and gentlemen. He's not bold. He shorts the top and longs the bottom. That's what we look for. Tino, when OnlyFans? Okay. Okay. Well, look. I mean, I'm not talking about OnlyFans. Please stop it. It doesn't make sense to be talking about that. Anyway, just quickly having a look at what's moving right now as we head into the opens itself. Looking at the maps, looking at the stock market, you can see it's not really great. Oracle's making a bit of a move to the upside, but it's very mixed across the board. Nothing's really happening. Netflix, have you heard about Netflix? So Netflix is wanting to go in and step in and buy Warner Brothers. Okay, I believe it's been done for $72 billion. But the problem is Netflix is down because they are agreeing that if they're going to do that, they're going to buy and they're going to pay this penalty clause of $5 billion. What a flipping cost for an early termination fee of $5 billion. And Netflix is like, how much is that? Yeah, we'll honor that. We'll honor that. I mean, come on, man. Of course they will. You're going to take over. There's streaming and then there's taking over. And Netflix is going to be the home for it. That's what I believe is going to happen. So what trading crypto will be like during the new recession? We really never had the situation since 2007-9. And wasn't crypto born out of a recession? Would we get new money type out of a new recession? No. It's rotation. Problem is money that should be going into crypto is already in the tech market. Okay. All the attention's over there. So when you've got Nvidia moving up, cryptocurrency moving down, it tells you that the risk appetite is not favoring crypto. Crypto would have to get to a significant low to really grab new money's attention. But new money will be going into crypto with the idea that these pumps and dumps, they are a continuous thing, excuse me, in cryptocurrency. So they're going to be stepping in and hoping that they make it, get out as soon as they can. Of course, Bitcoin's price is going to continue to trade higher. It will, all right? But it's just the expectations of value are going to be changing over time. So when you understand that value is only based on what they believe it to be right now, which is, of course, the current price of Bitcoin. Belief and expectations are Bitcoin is priced at 90,450. Couldn't give two damns about what it could be in the next year. It's irrelevant for me because I don't know what's going to happen tomorrow. How can you tell me that in the next year it's going to be 300,000, 200,000, unless there is going to be a freak event where they cut the interest rate so aggressively, then all of a sudden the US debt is going to disappear, inflation disappears as well, and the purchasing power of the US dollar starts to come up. Awesome. All right? But it's going to be a period of time. We've been waiting for the 100K Bitcoin. We got the 100K Bitcoin. We're now trading below 100K Bitcoin. Okay? So that psychology is all in the bin. All right? So we need to go and take the next milestone. And the only way that we can take the next milestone is if the expectation of belief of value in the future for Bitcoin should be higher. But when you've got participants like this in the ETF that are offloading, you're going into a rate cut. You're going into money being cheaper. And Bitcoin is at near enough at all-time highs per se. All right. It's trading very positively. All right. The reset, Bitcoin should be trading very, very low as we go into the rate cuts. It should be. Because then the concept of money being cheaper is more appealing to put to work. But right now, you've got all these assets that are trading at significant highs. Money is going to start getting cheaper. Naturally, you would assume that when they get cheaper money, they're going to keep on going into the market and the market's going to keep on sailing to the upside. If that's going to be the case, we need sharp drops and equal reversals back up. That's what we're looking for. And that's what Bitcoin needs to do. Bitcoin needs to drop down sharply, okay? And I'd say that is the floor around 74,000, 75,000? Who knows? The idea is at what price is the logic of value going to be triggered the most at? What do the masses think that Bitcoin is valuable at or below a discount? Is it now? Is it at 77? Is it at 65? We don't know until we see it go there and react aggressively from it, because idea of value is perceived value. That means that at 67,000, I believe Bitcoin's going to soar from that. So I'll start buying at 67. So you'll start seeing lots of money going into Bitcoin. All right. That's how the lows are set. All right. That's what I think is going to happen. Altcoin season happiness will, when the blow off top happens, Bitcoin money rotates into alts. Problem is, right, is you've got them selling the Bitcoin ETF, right? Be careful with altcoin season, guys, because you're on the assumption that these guys are selling the Bitcoin, they're going to go to alts. Is that what the logic is? Because it's looking a little bit different now, all right? We've got other assets that we can go into. What we don't know is where this money is going to go. Is it going to go back into Bitcoin? Is it going to go into altcoins? Those days are back then. But because you've got such a fat supply of Bitcoin stacked in ETFs, you've got too many participants on Wall Street that do not share the same logic of Bitcoin money is going to rotate into altcoin money. Fundamentally, when Bitcoin goes up, altcoins should be going up too. And that's what we would expect. We hope that that cycle comes into play with the altcoin season and what have you. I just think it's getting challenged with the idea of at any moment, these guys in the ETF can just offload it. That's why you had altcoin season a few weeks ago at 88. Then it went down to 44. What's that? Anyway, take a look at NAS front run. Let's have a look. The market is now open, ladies and gentlemen. Let's have a look at where we are with it all. Here we go. This is a very nice front run, ladies and gentlemen. I mean, data's not even out yet and you're pumping that much. Please, NASDAQ, give me the flavor. Because look, man, if they go for the all-time highs today, that is a very, very good move. Okay? Very, very wonderful move. Do you understand if they cleared the all-time highs from the daily open to there? Okay? You know? That's a 3% gain. Bitcoin will just go above 90, whatever is it, 90,000? Well, yeah, it will go above 94,000, 95, but we need to see the money going in first. That's why when you see Bitcoin at these lows and NASDAQ at those highs, that's why I say to you, always trade another asset. Because look at the gains you'd be getting on NASDAQ against the gains on Bitcoin. That's the issue. Anyways. Tino, what's your gut saying? You green or red in 2026? I'm red for the first part. I'm red for the first part. First quarter, we're looking for red, right? And then we'll spend the rest of 2026 going back up. That's what I think is going to happen. S&P, 7,200, easy. NASDAQ, most definitely, very likely to try and take claim. Where we at? We're at 25,000 right now. I'd be expecting NASDAQ to go beyond 27, 28, you know? That's what I think going into 2026. Because we're going to start getting information about all this investment that's going into AI, right? We kind of had a little bit of an insight into it when Microsoft said they're going to reduce their sales quota on AI software. So it would be interesting to hear how things are going with regards to data centers and how much it's costing them to put that up together. SoftBank is starting to put some commitment into Trump-made AI apparatus, okay, chips, Trump-made chips. So we can appreciate what the markup's going to be on that. It's all about, if anything's going to be made in America, are they going to mark it up? Let me just ask you guys the genuine question right now. Made in China, 20 quid, $20. Made in the US, $50. It's the same product, right? Made in China, $20. Made in US, $50. Patriots will probably go over to the $50 one, or would they? Which one are you guys going for? If US made is aimed at hitting the patriotism of the US, why am I going to pay more? I mean, who's the patriot? If PCE comes in as expected, is it America? Is it? Listen, the PC, if it comes in as expected, then that means the market is just going to keep on doing what it keeps doing. It's just if we do get a bold reading, if there is a reading that shows an increase in PCE, then we're going to have a problem. If it comes in at 0.4%, that's a problem. That's going to put the brakes on the interest rates going into next year. Right now, the interest rates story, yeah, we're getting a cut in December. That's in 5 days' time. It's already been priced into the market. But if that reading comes in and shows anything above 0.2%, it might be a bit of a problem for us. Please activate the thank you function on your channel. How do you thank people on the channel? Okay then, cool. Tina, have you ever been live TV talking about the markets? No, I haven't. That'll be interesting. Starting off on a news anchor with good old Bloomberg. They'll be like, hello, Constantino. So you, what's your view on things? However they decide to introduce it. And I'll be like, well, Bloomberg. They'll kick me off, man. Uh-oh. Recent relationship between USD JPY and USJP yield spreads confirms a structural shift in USD. Okay, oh wow, JP weakness overshooting normal short-term drivers. We're going into a hike. I love it. I love it. Okay, then. All right, ladies and gentlemen, again, finally, just so that you guys are aware, the whiteboard sessions are available live. Pinned to the top of the chat. You'll get access to it. The market is going to get that information in the next 20 minutes or so. I've got to update the gang. And other than that, please just have yourselves a wonderful weekend. Trade safely, because next week is going to be a wild one. With that being said, mad love and respect, and I'll tune in.